Good afternoon. Welcome to the Monetary Policy Stance Press Briefing. Speakers in this afternoon session are Officer in Charge Chuchi G. Fonasher, Deputy Governor Maria Almasara Cid and Tuanyo Amador, and Sector in Charge of the Monetary and Economic Sector Francisco G. Daquila. OIC Fonasher will now deliver the statement on the monetary policy decision.
Good afternoon. At its meeting on monetary policy today, the Monetary Board decided to raise the interest rate on the BSP's overnight reverse repurchase or the RRP facility by 50 basis points to 4.5% effective Friday, September 28, 2018. The interest rates on the overnight lending and deposit facilities were raised accordingly. The Monetary Board recognized that a further tightening of monetary policy was warranted by persistent signs of sustained and broadening price pressures. Latest baseline forecasts have shifted higher for both 2018 and 2019, with risks to the outlook still leaning toward the upside. With supply-side forces expected to continue to drive inflation in the coming months, inflation expectations have remained elevated amid indications of second-round effects. Meanwhile, domestic demand conditions have generally held firm, even as the previous monetary policy responses continue to work their way through the economy. The Monetary Board, therefore, decided to raise the BSB policy interest rate anew to further anchor inflation expectations and to safeguard the inflation target over the policy horizon. The Monetary Board believed that a tighter monetary policy stance will help steer inflation toward a target consistent path over the medium term by reducing further risks to the inflation outlook, including those emanating from exchange rate volatility, given the continued uncertainty in the external environment amid geopolitical tensions and the normalization of monetary policy in advanced economies. At the same time, the Monetary Board emphasized the need for timely and appropriate non-monetary measures that will further mitigate the impact of supply-side factors on inflation, including rice tariffication. The BSP reassures the public of its strong commitment to take all necessary policy actions to address the threat of high inflation and deliver on its primary mandate of price stability. End of statement. Thank you.
Thank you, Deputy Governor Chuchi. Before we proceed to the question and answer portion, we would like to request Sector in Charge Tequila to tell us about the BSP's inflation forecast for the rest of 2018 and for 2019.
Thank you. Let me first cite the main factors that led to the revision in the forecasts. The Monetary Board considered the following factors. On the upside, we have the higher than expected August 2018 inflation outturn. Also, an increase in the price of rice and other agricultural commodities in the very near term due to Typhoon Ompong, and likewise the rise in global crude oil prices. Now, these were partly tempered by the slower domestic GDP growth in the second quarter, slower than anticipated, and likewise the latest monetary policy adjustment by the BSP. So given the foregoing, the revised forecasts are as follows. For 2018, from 4.9% in the August 9 Monetary Board meeting, the new forecast now stands at 5.2%. For 2019, from 3.7%. The forecast has been revised to 4.3%. And for 2020, the forecast has been retained at 3.2%. Now, at the same time, the Monetary Board noted in the set of factors that could affect the 2019 inflation outturn, quite a significant impact can emanate from passage of the tarification of rice imports to the estimate of about 0.7% reduction in inflation, which is why, given that this, if rice tarification pushes through in 2019, that could push the inflation rate back to within target range.
Okay, so thank you, Assistant Governor Francis. We now open the floor to questions or clarifications from our media friends. Since we are live on social media, we would like to remind you to please state your name and your organization before asking your question.
Warren de Guzman, ABS-CBN. The BSP continues to advocate for timely non-monetary action by government. However, considering that you have been forced to raise your inflation forecast a few times now this year, do you think those actions are no longer timely?
We'd like to emphasize that they do continue to be timely actions. Actually, if we were to look at the behavior of inflation on a month-on-month basis, from a peak of 0.9 percentage point in January of this year, inflation actually has gone down to 0 by May, before the current upticks in inflation, and the latest inflation in August again shows a 0.9 percentage point rate. Now, it can be noted that the impact of the monetary policy actions should be judged not just on the magnitude of the actions themselves, but they do cumulate. So, for example, the impact of a successive 50 basis point increase in the policy rate is greater than taking 2 times the impact of a single 50 basis point increase, because that shows that there is a commitment of the BSP to address the inflation pressures that may be coming from current developments.
Thank you, Assistant Governor. Next question, please.
Good afternoon. Mikael Flores of Nikkei. In the previous policy meeting, I think Governor Espinilla mentioned that the BSP expects inflation to peak in the third quarter of this year. Based on your reassessment of the inflation outlook, do you still maintain that view, or?
Yes, it continues. The latest inflation path, although it's a bit more elevated, continues to show a peak in the third quarter of this year.
Next question, please.
Hi, good afternoon. I'm Melissa from Business World. Sir, in the previous policy briefing, it has been flagged that the peso depreciation has been a concern. So how do you expect the successive 50 BP rate hikes from the BSP bode for the peso? Thank you.
it should help. Um, if we look at the press statement, it shows there that the tighter monetary policy stance should help steer inflation towards a target consistent path over the medium term by reducing further risks to the inflation outlook, including those emanating from exchange rate volatility. So that is one of the factors that the board considered the possible implications of exchange rate volatility on the inflation outlook.
Okay, thank you, sir.
Hi, sir. Good afternoon. Litas Lopez from Bloomberg News. Considering the impact of the recent typhoon on supply and prices, are you still confident that inflation will be back to target next year?
As we had noted in the latest outturn, the forecast for 2019 was revised to 4.3%. So this is uh, just a little bit above target. But we said that the tarification of rice can bring inflation back down to within target. It is in the nature of the supply side shocks coming from the typhoon to be limited to the impact of that to just a few months.
Mhm. I understand that there are also other factors fueling inflation, such as the higher oil prices
Yes.
and the continued depreciation of the peso.
Yes.
Are you willing to consider a rate increase that's higher than 50% if price pressures persist? Thank you.
Uh,
If I can just jump in, all the actions of the Monetary Board will be data dependent. So the Monetary Board will look at incoming data and react accordingly. But rest assured that the primary mandate of safeguarding price stability will be the main focus of the Monetary Board.
Yes.
Hi, Prince from FD. Regarding the previous policy rate hikes that you made, have you monitored how much of that has been passed through already through our banks, and uh, how long do you expect it to be fully implemented by the lenders? The following question is that aren't you worried that the traditional consumer spending surge during the holiday season will be affected by the new adjustment that you made?
okay. Um, Let me cite the pass-through since the beginning of the tightening episode of the BSP on lending rates, the 100 basis points so far, not including the current adjustment. The 100 basis points so far has induced an 84.2 basis point increase in lending rates. In the IBCL rate, it's a one-to-one pass-through at 103.1 basis point. And on the 91-day T-bill rate, it's 11 basis points.
Yes.
Dax Lucas from the Inquirer. The central bank has repeated over the last few weeks that the economy is strong enough to weather rate hikes. Can you share with us some insights into how much more, in terms of magnitude of potential future rate hikes, we can absorb before we see an adverse effect on the growth numbers?
As Deputy Governor Sida Mador mentioned earlier, we always remain data dependent. In the second quarter of this year, um, investment actually grew quite strongly. So the data actually show that the economic growth remains pretty robust.
The question is actually very conjectural, and it's also very difficult to answer. So it's very conjectural, very difficult to answer. But you see, what the central bank's objective is to stabilize the macroeconomic environment. The reason for that is you need to have a predictable macroeconomic environment so that you are able to make very informed business decisions as well as consumption, the earlier question about consumption decisions. So we think that as the cumulative 150 basis point increase in the policy rates work their way through the system, and based on econometric evidence, they would have some immediate impact, but the full impact is typically felt within a 1 year cycle. So once we look at that, whether they're having some traction on both demand as well as on particularly on inflation expectations, then we'll look at considering further policy action from the monetary board's perspective. But it continues to be one that will be dependent on incoming data.
Okay, so thank you. Oh, where's the mic?
Ma'am, just a follow-up kanina. I was also asking how do you think the policy rate hikes will impact the traditional consumer spending surge during the holiday season, since you hike this much, and the inflation environment is basically supply driven, and you're tightening from the demand side. So how do you think would that affect the consumer spending?
We're not really tightening only from the demand side, because we know that there are supply side, in fact, very important supply side pressures for the reasons that were enumerated by Dr. Dakila. But we think our view is that aggregate demand in total is resilient enough to absorb the changes in interest rate. Again, the issue is whether you're balancing actually stabilization versus providing support to growth. That's a fine balancing act that is being considered in all of these policy actions.
So thank you. Another question, please.
I'm Frances from CNN Philippines. The Asian Development Bank and ANZ Research downgraded their growth forecasts yesterday, and inflation is a significant factor. So what are the reactions of BSP to these revisions? Thank you.
The government's growth target has been maintained.
6.4 is still pretty respectable and higher than the trend growth of about 6%. So we don't, and you shouldn't, I think there shouldn't be a spurious precision being put in these numbers. It's directional, admittedly, it's lower, but it's still respectable and above trend growth.
Okay. Another question, please.
Ma'am, Karen from Reuters. How about, ma'am, in terms of credit? If I'm not mistaken, the latest data on credit that's available is for the month of July. So we haven't seen yet how it's been affected or impacted by the 4 consecutive rate hikes that the central bank has done. But are we seeing an impact already, ma'am, slower, or especially, for instance, property sector? Thank you.
The numbers will actually be released by tomorrow,
yes.
so we'll see those. But the numbers are apparent will show some healthy growth on credit, based on what's happening to output and also what's happening to inflation. But the numbers definitely will be. It's part of that release calendar.
Okay, so thank you. More questions? Okay.
Sir, just a clarification. The 0.7 percentage points impact of the rice tarification will be on average inflation for 2019?
Average inflation for 2019.
Okay. But for...
the impact actually depends on when rice tarification takes place. The scenario that I gave will say that tarification will become effective in 2019. Start of 2019.
So you're no longer hopeful that,
Well,
given the pace of the
If tarification the tarification law is passed in the fourth quarter of this year, the magnitude of the impact will still be in the bulk in 2019. Although an
Yes.
earlier package, of course, will have some spillover into the 2018 inflation.
Ma'am C, do you already have a forecast for September inflation? Or if not yet, could you just give us an idea of on how September inflation looks like?
The staff will be releasing the forecast end of the month, and will take into account. Oh, that's already too. It will take into account all the developments.
Thank you.
Could you share with us some insights into how the Monetary Board debated today's decision? Were they immediately of one mind early on, or was there a vigorous back and forth today?
You'll see that when we publish the highlights of the monetary board.
That's like 2 months away.
Yeah.
No, but
2 months away.
was it immediately a collegial decision, or were there holdouts? Were there?
I don't think we're in a position to discuss individual decisions of the monetary board. The monetary board takes decisions on a consensus basis, so it's beyond our pay grade to discuss to discuss these nuances or.
We'll take one question from the back first before we come back to the front. Yes.
Thank you. I'm Yamaguchi from NHK Japan Broadcasting Corporation. So can I ask the FRB in United States decided rise decide the interest rate in this morning? Could you how do you estimate the effect to the Philippine economy and or decision
Yeah.
for today?
That decision was already anticipated, and it's already incorporated in the inflation forecast that we gave out.
And,
Same. It was part of the decision set of the monetary board when they decided to hike rates by 50 basis points. So interest rate differential is also one factor that we're looking at, or that the board looks at when it considers policy actions.
do you feel the effect will be severe for near the future? How do you estimate for the effect in the?
You mean severe for the Philippine economy?
Yeah. Yes.
You mean the interest rate, our own interest rate actions? We as, well, Francis, these are all, whenever we have all of these policy actions, whenever we have these policy actions, we feed them into a macroeconomic model so that they're internally consistent. And what it's showing is that a healthy growth of the economy is viable even with this policy rate hikes, because the issue is really one of stabilization and anchoring or having inflation expectations well cemented. And if they are well cemented, then you're able to create an environment that is conducive for stronger consumption, stronger investment, and other aggregate demand considerations. Francis, you want to add something?
The simulations, the necessary simulations were done, presented to the board. This we do on a regular basis before the board makes a decision on the monetary policy stance.
Thank you, sir.
Ma'am, just curious, actually related to some of the questions that were raised. How much weight was given to the issue on, well, the Fed and the escalating trade tensions between the US and China in terms of how we decided on the policy rates today? Because some are saying that, you know, because of the close relations with China in terms of trade, some Asian economies are giving more weight to this particular issue compared to the movement of the Fed rate.
Collectively, the board looks at the risk matrix, and one of the key considerations would be what's happening to the external environment, because dampening global demand would tell also not only on domestic growth but also on inflation pressures, global inflation pressures. But as to the precise weight, again, this is something that is well, not really. There's no mathematical precision on that, but there's a weight. There's a weighting. There's a risk weight attached to how the board looks at the risks of a global slowdown arising from those factors that you identified.
Thank you. We'll take the last two questions.
Warren again of ABS-CBN. Looking at the two new forecasts, you're essentially saying that the Philippines is going to go through 2 straight years of above target inflation. So how does that figure for growth in your forecast? Do you think, well, first of all, the government's forecast of 7 to 8% growth, is that even possible anymore, or should we brace for even slower growth compared to the first quarter this year?
We do have nowcasts of growth. We have our forecasting models also for growth. For the third quarter at least, we see the growth numbers to be maintained. From the second quarter numbers. Now, once the infrastructure program of the government kicks into place, that can also provide further impetus to growth.
Thank you. And for the last question this afternoon.
Hello. This is related to Warren's question. Since you have like a 2-year wherein you expect the inflation to breach target, don't you think loosening the target to 3 to 5%, as was previous year's case before, would be prudent, considering you're also managing demand in terms of infrastructure spending from the government?
No. The analogy would be if you're in a class and the passing rate is 70, you don't change the passing rate. You strive to meet the passing rate. So that's the growth target. Once it is set, it is a target. It is something that we all aim for.
Okay. wait for the mic.
Sorry, ma'am. For milestone purposes, ma'am, we're just curious. Is the back-to-back 50 hike the first in the Sentral in so many years? I think it's the first since the inflation targeting, for sure. But has there been a similar move in the past?
We will check, but I note that there was also a time when we did aggressive stance, no? Once 50.
It was 25, 25, 50, and then stop, and then subsequently brought down the rate. But that was circumstances change, so you can't really just can't make comparison on historical basis.
Oh, we'll do the fact check.
But we can fact check.
So this now, unless there are any more additional questions? Okay, if there is not, we would like to thank you all for your time and attention this afternoon. We would like to also thank those who are watching us on Facebook Live today. This is now the end of our monetary policy stance briefing today. Thank you so much.